Okay. If you can hear me, let me know. Good morning. All right, can somebody give me an audio check? Okay, perfect. All right, so every single day we go through here and we start our steps off with previous month 50% and NFP Friday, right? We can see that we get response and rejection from the top of NFP Friday's range, right? And that we didn't have the weakness to come down to previous month 50% and test it, right? Now, on days like yesterday and Tuesday, when let me add Costa. There we go. Can you hear me?
Yeah. Good morning.
Good morning, bud. So when we put the low of the week in, right? It's gonna feel like you want to sell the crap out of this, and that the market is failing, and the order flow from the intraday is just the bias is completely wrong. That's the whole reason we built this system. It's an if-then statement, right? If we are above previous month 50% in NFP Friday, we expect to end the month higher, right? If you are seeing order flow that does not match with that thesis, sometimes that is a great time to step away from the market, back test, forward test, strengthen up some of your skill sets, et cetera, right? Go to the weekly chart, put things in the true context of where you are, right? This was yesterday's low. What did it respond off of? A constant variable. We already said we haven't expanded enough to the upside for this month, right? Then you can do stuff like, so we still anticipate the low of the month, the low of the week to be formed yesterday. Now we're above Sunday opening price. So that saying that's the confirmation, that's the alert to say that this is the low of the weekend. The confirmation of that, which won't happen, which probably won't happen today, because we've already moved 81% of the range. However, we have retail sales coming out, and the euro just cut interest rates. So we have the economic news catalyst, right? And we have what company is it? Let me check my notes when I was reading research, and I was the Taiwan Semiconductors. They report today. All right, that is going to be that, in retail sales will tell us, does this alert that's saying the weekly low might be in, are we going to have enough expansion to confirm it, right? So based off the daily, previous month 50% at NFP Friday, we know we're expecting to end the month higher. Based off of the weekly, we know that all we did was test last week opening price, right? That wasn't a disaster, right? But it felt like one. I know it felt like one because I sit here and trade the same market you guys do. And if I'm feeling this way, then I know you're feeling this way. And I've been doing this for a long time. I've watched the same system play out so many times. That's why I tell you guys the power of statistics, right?
Mm-hmm.
Right? So this was yesterday, right? At the close, right? These were the top 5 highest probabilities for the week to give you, and we talked about this same exact chart on Tuesday, yesterday, etc., etc. So when I'm feeling like my thesis is completely off because we're having 1 hour's worth of drop, 2 hours versus worth of drop for the whole week, and it just seems like magnified and dramatic and crazy, I put it on the hour chart. I put on the highest probable weekly profile because what you guys don't realize that TFO did for you, this is synchronizing starting on Sunday, right? And some moving averages and some standard deviations is going through and is filtering which weekly profiles in the past, you know, are identifying the same price measurements. So yesterday and the day before that, when you had 2 hours worth of a drop and it started making you think that you are wrong within your higher time frame, right? And to prevent you from making bad decisions, right? Just pop if you can't see it on the previous month 50% in the NFP Friday, if you can't see it on the weekly chart that all we did was test the open and put the low of the weekend, right? And that we still have to expand higher. If you don't see it on those two charts, right, to give you a clear focus on where you are, you don't see it on swiping through. Well, that happened tonight, so that doesn't count, right? Then I encourage you to put this tool on, right? Because guess what? You don't have to be right intraday to be successful. I've proven it twice this week. Twice this week.
Mm-hmm.
I was wrong as shit on Tuesday with my analysis. Yesterday, London didn't show his hand for my analysis. I said, guess what? Like, we'll put in the low of the weekend. I'm just going to sit and be patient. I took my trades. I was wrong as shit on this day, and I was wrong as shit on this day. Right? I still stuck to my trade plan. My analysis was off, but I still stuck to my trade plan, and guess what? I still made money that day. Right? Because I tell you guys every single day, right? What we do here in the mornings is we put the highest probable statistics, levels, and directions on the charts. We're not here to do that to say we're right. We're not here to do that for ego. We're just here to do that to make the best possible statistical directions and decisions, right, to trade our systems around, right? So when you get confused because of 2 hours, right, 1, 2 hours in the week that just were very dramatic, right, do what I just told you. Go to the weekly chart, check your daily chart with previous month 50% NFP Friday. Check your weekly chart. Check to see where you are in relationship to Sunday. And then even then, right? Because what you guys got to realize, this chart right here is designed for swing trading, not intraday. It's a very simple system that allows you to stay in tune with the higher time frame swings, right? And when you get confused on the intraday, refer back to this chart. And then if you're still confused, put this TFO premium indicator on the hourly chart. Look at the last 5 weekly. Don't even select anything, right? Until I'm 1000% confident, right, that the low's in, meaning the alert in this case, we're below Sunday price. If I'm trying to see if this is the low of the week, right, the alert is swiping through Sunday, the confirmation that this low is on Tuesday. Guess what? This week, I won't be able to confidently confirm the low of the week probably until it's the end of the week. It's like that sometimes.
Mm.
That's okay, right? But when I'm checking this chart out, right? All right, I won't put the low of the week on here. I'll just leave it blank, and that'll be that, right? Now, if we swiped above that Tuesday price and that Sunday price, I could have easily said, you know what, Wednesday is the low of the week. What does that scenario look like? And wow, look, it didn't even change. That's crazy. But that's only once I have had the alert and the confirmation from Sunday and Tuesday's price that we put on that higher time frame chart. Right? So, like I said, when you have days like this where price goes against you, go back to context. Go back to context where you are, right? Go to your higher time frame charts, which if you guys want this layout, I'll share it with you right now. Because I know a lot of you guys might not have it. I don't know if you guys are going to get this. Tell me if you get this in the chat, because I'm going to put it in the Restreamio app, and I'm not sure. Can't post messages with some characters in it. What? That's dumb.
It just appeared in YouTube.
Okay, cool. Oh, that's awesome. So now, remember the purpose of this part of the system, right? This is to anticipate using the same systems over and over again to make decisions where we're going to end the month higher. This is all based off of momentum, not fancy precision, not any of that. It's just the broader things. We're above previous month 50%. We're above NFP Friday. Yes, we dug into the NFP Friday. So I'm thinking, like we've seen in the past, like I've pointed out in the past, right? Because when we dig into the NFPs, the next couple months we have a quarterly slowdown, right? So maybe that's a clue. But for now, I'm not expecting that this month. I'm expecting to end the month higher. Where? I don't care, right? And that's the key right there. Is this is a simple enough system to say, hey, I expect us to end the month higher. The weekly has only made it 2.4. Well, guess what? I expect 2.5 to 5% for the week for the month, right? So that would be right around there. That would put NASDAQ around all new highs, right? And that's my net, right? That's the difference between me and most is I don't have to be a sniper. I was very successful, even in the Army, not being the most precise, but being the most consistent, right? Because being precise is exhausting. It's exhausting for everybody. To come out here and say, hey guys, every single week, I'm going to call the tops and the bottom of the week. I'm going to call the tops and the bottom of the day. I'm going to call the tops and the bottom of the month. Like, that's stupid. And it's exhausting, right? So that's why I'm like, as long as I get the swing for the month and the quarter correct, intraday is going to be fine, right? That's why you don't see me making a big deal like on Tuesday when I was wrong with my analysis. Well, I wasn't wrong because I told you guys when I did the re-engineering session, I saw it. I just was wrong at 5:30 in the morning. But once order flow kicked in at 10:10 and we engulfed that London, I just put in the data and it told me exactly what it was going to do. So with that being said, Clifton, what are your thoughts when on the daily chart when price reaches 2 to 4 standard deviations from the NFP high or low? You know, I don't know. I've never back tested it, but that sounds like a great back test, brother. All right, so we talked about our morning session, like our swing, and how to, when we have 2 hours in the week that scare us from our higher time frame, how to view the markets to see if you're on the right track, right? So with that being said, we're going to turn that off. And guess what? There's going to be plenty of times There's going to be plenty of times where this will continue through. So I'll be wrong that day. And then I'll have it, because remember, when the market punches you in the face, your job is not to sit there and cry and focus on the pain of the market punching you in the face. It's to figure out where the market's exposed at. Because when you throw a punch, you're exposed right here. Same thing goes with the market. If the market did continue down and swipe through NFP Friday, where was the market exposed at? Now I'm looking at previous month 50%. And I'm going through the whole decision-making process around a box and a line for the higher time frame, and even on the weekly, right? So don't fall for the shenanigans. If you feel uncomfortable for the day, the best thing that you can do is just stop. All right, so with that being said, generated market clues, we came down to previous day 50%. Like I've always said, the hardest thing for newer traders to do is to be wrong. I love being wrong. There's two types of people in the world, right? There's the fighter and there's the golden spoon, right? The fighter gets knocked down a billion times throughout life, over and over and over again. He fails. And if he's not a little bitch, he gets back up and tries again. And when life knocks him down, while he's on the ground seeing stars, he thinks about, what did I do wrong that got me here? I need to make sure I don't do that when I get back up. He stands up, he brushes the dirt off of him, and he bulldozes through fucking life. Right? And he does this all throughout his life. Golden spoon people have things handed to them. It's not a problem with that. There's nothing the matter with that. That just means the fighter starts down here, the golden spoon starts up here. They're both, if they had the right work ethic, character, and values, they're both going to project higher, right? The problem is eventually, throughout life, golden spoon is going to get knocked down. And when he gets knocked down, he won't recover as fast as fighter until he gets knocked down a couple more times, because it's so freaking uncomfortable. You as traders, right? I remember my first big loss. It was 22,000. I'm still recovering from that loss. That loss was my deployment money that I saved up, and it took one Friday afternoon and selling options premium, OTE options, for it all to go, right? And that was painful, right? Me and my wife saved up. We sacrificed vacation time. We didn't go on vacations. We ate ramen noodles just so I could pursue this trading career. And there was nothing worse as a man to go home to my wife and say, today I blew it all up. All the sacrifices we made, I blew up because I made a bad decision, right? That was me getting knocked down, right? And the cool thing about that lesson, was when I truly understood that risk management and the risk profile and how position sizing and aligning the market conditions with the risk profile is more important than anything out there, right? And even though it stung really bad when that time happened, right, I've already recovered that, right, by a lot, right? But I needed to feel that pain to not disrespect my leverage, to learn not to abuse, margin, right? All right, so moving on. And you guys will too. You guys need to feel that pain. That's why I tell you guys, like, I usually don't talk to traders unless they've taken a significant loss, because in the beginning, it feels like a game, and you lose. Like I tell you all the time, right? Prop firm's job is to keep you distracted and focus on month-over-month performance, quarter-over-quarter performance. They're there to make you focus on that day-over-day performance, right? Wall Street, whether you trade a live account or like a live account, all these systems are there to desensitize you from your dollar value. That's why I tell you guys the most important thing you can do is maintain a budget, a checkbook, put in a checkbook, a physical check registry, everything, all inputs and outputs, so you can have a grasp reality and stay grounded in what you make and what you spend. And just that little tip every single day will keep the value of your dollar in the forefront of your mind when you're placing trades, right? All right, so moving on, I need to download that daggone new one. Let me close out Power BI.
Yeah, with the date and other day in it.
Yeah.
Yeah.
Need to get down to move up. Exactly. Well, not always. Not always. Some people are smart enough to realize, and I was not one of them, that like this isn't a game, and that it requires discipline, consistency, and swallowing your pride and ego and just following your workflow system every day the same way, and then stuff will start populating. You guys see what I do? I do nothing special, but what makes it special is I do it every single day the same exact freaking way, month over month, quarter over quarter, so I can make the decisions that need to be made, and so I see how it operates through all market conditions, right? And that's all I'm trying to promote. All right, so this is still set up for the wrong times. However, we're currently building it where we'll be able to release it. Right now, it has too many DR variables in it, and DR is a great, great community, right? I like building things myself the way I like to do it, and I use pure statistics for everything I want to do, right? And I want to build my own version of that, right? Using 1800 to 19 as the range, and then what it does from 19 to 230 as the Asia, 230 to 330 being the London range, and what it does until 730. Because I've traded, and it's going to be specifically tailored towards the kill zones in NASDAQ, because the NASDAQ moves specifically a certain way, right? And I just, that's how I want to do it. And since it's my money at capital at risk, I got to build the systems around that, right? Just like each and every one of you, I don't expect you to sit here and trade the exact same way I do or do the same exact workflow that I do. But hopefully, as you watch me, you're having aha moments, you're having the idea generation part of your brain kick in, and you're sitting there building your own workflow, right? Because that's how you stay scalable and sustainable through time. And you're learning how to make decisions. All right, so moving on. First thing we're going to do, and I need to add a playbook because I need to write this down in order. Playbook. All right. Put in Asia, London variables. All right. Let me get rid of. And yeah, we're going to take our time today so I can get this written out so we don't skip steps. All right. So put in Asia and London variables. Whatever range you decide to do, what did you do after that range? For right here is 1930 to 2030, 03 to 04. So what Asia did is it went long, meaning right here it spiked outside of the range. And even though it sucked back into the range, it never breached this low. So this would be a long true, right? And then it just, bam, went long. So come over to our database. Oh, I got to reset this. How do I reset it? Oh, yeah, bookmark,
Yeah.
bookmark,
Yeah.
view, bookmark, reset to start. Starting with 4,180. We said London is long. true. It did not break the model between 2 and now, so we're going to not select that. We now have 1,547 data sets. Right? London has gone long, broke out of this 3 to 4 range, and is still long. Just random shit popping up. Long. And we're going to leave this to all. We're going to leave this to all until 06.
Yeah.
Stop. I don't want to see you. I want to see my charts. Right? When 06 takes out this high and can prove to me that it's not going to suck in and reverse, right? Which I'm highly confident it's not, because we've already taken out previous day's highs. So momentum for the daily is higher, right? Then that will become a true, right? I just want to align 6 o'clock is a new H4. So if we go above the previous H4, that's H4 momentum going higher. And that's when I would truly confirm that, momentum from 6 to 10 will be up. Doesn't mean it won't retrace. All right, so now, we're just going to put that as true for now. All right, and now we're going to put, so now we're going to do our structure-based probabilities. Let me write this out. Structure-based probs. Actually, no, we should do high and low day. And feel free to input goes to high, low of day. Then structure base. Meaning previous day, high, low, mid. Previous 12-hour, high, low, mid. So this is from 1800 to 06.
RTH gap.
RTH gap will be part of after we put time-based probabilities in. Midnight. No. Settlement. And Globex open. All right. RTH gap probabilities. All right. Projection. Probs. And there's a way I can add columns. Quantum was supposed to show me. I don't know how it is, so we're going to do like this. We're going to put another one on. And we're going to try to move it down.
Nice.
Scenario building. Put the scenarios in. Possible New York scenarios. Holy shit. It's because I haven't drank enough coffee, and even if I did, I just suck at spelling. All right. is why I do it. Distributions. Average 10-day. 18 to 230. 230 to 7. 7 to 11:30. 11:30 to 16:15. What am I missing?
For scenario.
That's when I do the
Scenario one.
9:30 to 10:30. That's what it was.
Yeah.
Based off of London, find 9:30 to 10:30. All right. So we put in the Asia London variables. Now we're going to look for high of day, low of day, right? We can see already, based off of what Asia and London did, that there's a 74% probability that the close will be higher than the open.
Yeah.
Sorry, somebody added something. Oh, there's a lot of freaking comments in. That was getting cut off from the pink taco for a month or two. But man, sorry that happened. No, don't be losing trade every day. Listen, like you said, the pink taco. Listen, man, like that's like me going to war and expecting and just living in fantasy land as an infantry dude or as a ranger and thinking every time I go to Iraq and Afghanistan, nobody on my team is going to get injured or killed. Right? It's just unrealistic thinking. How do you get back up? Right? I added last week's 50% to my charts using the higher low box, still keeping daily. Yeah, we're not going to get into that yet, Matt, but that's a great idea. Matt, okay, so it looks like you guys are just having a bromance in the chats with each other. All right, so back to high of day, low of day, right? So we can see that the variance, the medium, and the mode are between 1% and 1.32%.
Yeah.
So we're going to come over here. (1.3%). And guess what? I expect this to be wrong because of the news that came out, the news that is coming out. Like there's a high probability that this will not be the high of the day zone. This will actually get blown right through. But guess what? If it gets blown right through, what is the market telling me? Especially when I use my hourly boxes, right? However, this is the workflow process that we do. So we stick to it and we put it on our charts because it's not about being right. It's about making proper decisions.
Yes.
What was the high part of that?
The 0.97 I've got to 1.26.
0.97 to 1.26. How the hell
Yeah.
did you get that? I didn't get that. I
So
got, 1 minute, let me make this big. That's what she said. So I got 1.01 to 1.32.
how many data sets do you have? Is there an extra? Because I'm long.
625.
Yeah, you've got true selected. I didn't think we
Yeah,
were having.
I went on it. I went on and selected true.
All right. Sorry. With the same.
Okay, cool.
Yeah.
And so it was 1.03 to 1.32%.
Yeah.
And then time that we can expect that to happen.
There's 2 bits really, isn't there? We got around about the new 9:30 to 10,
or the
10:30,
end of the day.
or the end of the day. Yeah.
We're gonna leave that blank for now because, like, I feel like the high of the day and low of the day should be the last thing that we put in
Yeah.
because we still have a lot of scenario build. That will
Yeah.
make this part of the workflow process easier. But for today, we'll just put in the low of the day and we'll work around it. So 2.7 to 2.5,
0.27 to 0.5.
0, so a quarter percent to 50%.
Yeah. Yeah.
Yep. To 0.5% down. And I got meetings all day with the big bosses. Have you ever seen a Christmas Vacation?
The film.
Have you ever seen a Christmas Vacation with Clark Griswold?
Yes, of course. Yeah. Yeah.
My
Yeah.
favorite part of that movie is when, like, he's standing there next to the cubicle, and then the big boss comes up, and he's like, "Merry Christmas, sir. Merry Christmas." And they're walking by him in the suits. Kiss my ass, kiss his ass, kiss his ass. Swear, Clark, you might be the last true family man. Okay, so we did that, and now we're gonna do put that. Now we're gonna put our structure-based probabilities in, right? And will you read them off to me? Let's start with previous day high,
Previous day. I just waiting for it to load.
and we want to put this on, even though we put it through. Remember, we're gonna be referencing this.
Yeah. So because I haven't done that loaded that into one bucket day block yet,
That's fine.
what are we going to use? The 8 to
8 to 12.
yeah. So 46%.
Okay, and we'll put. Oh, we already took it out. All right, and give me the previous day low.
Previous day low, 20%.
Okay, give me structure-based 12-hour.
12 hour. Okay, so obviously this is all day. The high, 95%. But we're at the high.
Yeah, we already yeah. That's okay though. Listen,
Yeah.
like, it is okay.
Yes. Yes. Yes.
Remember, we're going to be referencing this along with our throughout the day, right? With the hourly boxes. All right, would you say it was what, 90?
95%.
Okay. There's your 95% trade. Don't tell you it's worth 7 handles right now. Shit, I won't be greedy. I'll take that as 7 handles and run with it.
Yeah.
All right, structure set 2, which
The
is the low.
low, 44%.
Damn.
Yeah.
Okay, so now we have our structure-based probabilities on, which is the previous day high, low, mid. I don't like putting the mids on because I will automatically see them.
Yeah.
And it just clutters up my chart too much. Now we do our time base, right?
Yeah.
Midnight, clone, Globex, clone, settlement. And before you read off the probabilities, let me create them in place. So that one dude yesterday told me about this trick, and Jonathan, if you're listening, this is a pretty cool trick. You go to SET, make sure to select it here, go to yesterday, and then look at the close price, 20349. 20349 is right here, 20349. 20349, 20349. Of course, it's gonna be down here. I'll forget that. Right there. Let's put on our midnight price. You don't need the midnight snap for that. Then we'll put on Globex. Right there. All right. Now we're going to do our RTH gap probabilities. Oh, real quick, give me midnight, settlement, all that.
Yeah, 60% midnight.
Which one?
Midnight.
And remember, that's just using what Asia and London has done.
Yeah.
Give me Globex open.
Globex, 47%.
And that's between 8 and 12, right?
Yes.
All right. Settlement.
47%.
All right. All right, now let's do our RTH gap probabilities. And you said you added a cool new feature, which allows me to select day of the week. So you already selected it, looks like, right?
Yeah.
Okay, cool.
Thursday.
So what we're going to do here is we're going to take our fib. We're going to anchor it on the settlement price. We're going to draw it to the left side. Now we're going to switch to RTH, right? We're going to go to our template, put in RTH gap template, right? And for now, you're going to start filling it in, right? So for the 25%.
Yeah. 25% is 80%.
80%.
We've got the day on this now, just to let you know.
That's so cool. 50%.
50% is 72%.
75%.
61%.
100%.
54%. 54.
All right, we're going to switch back to electronic trading hours. And if you're using the midnight snap to pull these stats, that's how you would do it. I draw this until 9:30, so wherever the 9:30 is, and then obviously the 9:30, wherever the 9:29 or 9, yeah, we'll just say 9:29 is where your RTH gap stat should be, and your 100% should always be on settlement, right? All right, so we did that. Now we're going to do our projection-based probabilities based off of what Asia and London did. It will give us these probabilities. Dang it, I completely forgot to go live in the Discord. Oh well. All right, so now we're going to turn on the vet. All right, we can see that the average daily range is 298. We're already at 237, so 81% of it. We can see that the average weekly range is 764 over the last 8 weeks. 764. We're at 473, so 61% of it. Right? And now we're going to put our projections on. So let's start with, actually, I need to do this real quick. Make sure this is switched to Wednesday. And give me 8.
8. Positive 8 is 45%.
And when in doubt, like I think we might have the news catalyst to extend further. So I'm going to do the 12, 20730. And I'll just reference that on
Yeah.
this right here. And we can see that it's not within the average daily range, but it's an extension. I want to put that level on there, 13%, saying that it might be an anomaly day. And then give me -1.
-47%. Bloody hell.
And then give me -2.5.
2.5 is 33%. 33.
All right. So now that we've done that, we're going to do projection-based probability, scenario building. So, scenario building, right? Take a text. You've got two scenarios, right? Does not breach London low by 8:30. In this case, all right, what are the probabilities of 9:30 to 10:30
We've got.
above
Right,
London
I'll let you write that.
low, engulf London below London high. All right. So above London low will be the highest probable for now. But what is it?
Above London low, 59%.
Engulf London
26%.
below London high
15%.
All right. Does breach. Okay, 10:30 on.
10:30 on is 55% long.
55, you said?
Yeah, 55.
All right. So now, what all did you screenshot? Like, so you let me synchronize my chart with yours. So you
Yeah.
got Asia long true, no
Yeah.
break, long
Correct.
true, London.
Yeah.
Did you have anything else selected?
No.
Okay. So we're going to go to the New York candle, right? We're going to select above London, just above London, right? Like this. And we're going to see what the day looks like,
Yeah.
right? We're going to screenshot this. And we're going to see where'd it go?
This happened yesterday, and then all of a sudden they were there trying. Yeah. I'll tell you what, I'll send it to you now. One sec.
Do the London one too.
Yeah. Yeah. One sec. Damn it.
And all of a sudden, it's just going to randomly pop up on my chart.
No, it's not working for me.
That is not working for you.
Oh, my screenshot tool isn't working, and of course
Copy image.
I'll sort it now. Don't worry.
Oh, good grief. TradingView, you are weird sometimes. Anyway, we're going to put that on there. We're going to study this, right? And we can see that right now, 6 to 7, we're starting to go flat, but we're continually making higher highs, lower highs, right? Until 8:30, right? That's the highest probable in this scenario, right? New York, right? from 8:30 to 9:30, we're pretty much flat.
I just dropped it in our chat.
Oh, thanks, dude. And then from here, either way, like if 9:30 goes up, it goes flat, slowly drifting. So this would be like either a range, we're looking for the range, or a DWP, but more than likely it looks like it's going to be a range. Right? It looks like the moves happening before market. Welcome to earnings season. That's how it be. If we drop, it shows that we'll recover from it and then range. Right? So this would be a DWP. Right? Now if I wait, is this selecting, is engulf above London selected? There we go. That's the right one. All right. So this shows 9:30 should drop. We recover by 10, but then from 10 to the rest of the day, we're in a range in market. So remember that exercise I had you guys do? Hopefully you did it, right? Where we were identifying, right, the RTH being a DNP versus DWP versus range trade. Well, now, we now have the ability to see what that kind of looks like. So this looks like a DWP, right? We move away from the 930, so it's the 930 prices right here. We're moving away from it and then ranging. So that's what we're expecting. Okay, so now moving on, we're going to do our distributions. Oh, wait, we got to do the second scenario. Scenario 2. Does breach London low by 8:30 or 9:30, because we have that news catalyst that I have a sneaky feeling about. 9:30 to 10:30. I forgot I can just copy and paste. Technology, right? Dude, if you think about it, think about how excited the people must have been when copy and paste became a feature on a computer.
I was there.
They were like, oh my God, they're responding to it and you were there. It's like the AI of the 90s and the 80s. Above London low percentage if we breach, what is it?
Right, sorry, I was just doing something there. If we breach between, after 9:30, right?
Yeah, 9:30 to 10:30. But we breached London low. So that means like London should be a long false.
So we breach it before 8:30. Okay.
Mm-hmm.
Sorry. Yeah. Okay. So then we have above London low is 26%.
Engulf
is 34%.
Below London high
40%.
But we already know that that's very likely 10:30 on.
Long
by how many percent?
51%.
All right, and we know that that is very unlikely to happen, but we still have to factor it in. All right, so we're going to put our London OU line to make the decision from. Dude, now trading views all jacked up. Why is this not letting me draw a damn line? All right. Let me save. All right, it's saved. I'm going to reload and everything's going to crash because that's how my life works sometimes. Oh, and guess what's here? Yay.
Yeah. One thing I do with them, Mickey, is I draw two vertical lines down, one at the end of the previous session at the 5-2, or the last candle, and then the same at the end of London. And then what it allows me to do is actually get the horizontal scale bit correct. I anchor it off the first point. Works quite well.
I'm just going to draw it obnoxiously big up here and pay attention to it. All right, now what's my London OU?
That's pretty cool, yeah.
It's just a quick reference guide.
Absolutely.
To remind myself, hey, idiot, was supposed to be in a range on the whole RTH session because of the move that happened. Stop trying to trend trade. And we might not be.
Our numbers are looking that way anyway, so obviously.
Yep. Okay, so now that we did the scenarios, we'll do a distribution. Average 10-day range.
Run that.
The bet. All right, is 289. What is the percentile? 1.35. Jonathan, man, how have you been, dude? I haven't talked to you in forever. I was thinking about you yesterday, and I was thinking, man, I need to call John. Okay, so Thursday from 18 to 2:30, 0.51. That's pretty expansive for that time. 0.5%. Now we're going to do 2:30 to 7, 0.44. So tomorrow we'll be having Andreas on to talk about this market regiment that we're in and what he's seeing from the industry groups and all that. 1.2, so 1.2 for 7 to 11:30. That's wild. And then 1.12 for 11:30 to 1600. And remember, this will be, as we place these, the overall, like this will change. It's your job as the user to synchronize them with what price is doing. So for example, we can put this one in. We sync it to that high or this low right here. And we'll draw that out to 230. And it made it, that's wild. Right to the tick. Oh, not to the tick. It moved, it overextended. Okay, so now the next one is from 230, and we're at the top of that range right now, to 7. And now it's at 0.44. So we'll overextended it.
Yeah.
We know that this one has to take into consideration let me erase these playbooks, right? This one has to take in consideration the midnight, the Globex, the RTH, and the settlement. That's what I usually do. Wow. So this is saying, right, that there is a possibility, and this is why I wanted to check the other side, because if we're going to get retracement, there's more than likely we're going to either engulf London, we're going to breach it, go into scenario 2, where we breach it by 8:30 or at 8:30 due to the news, or we're going to do the reversal between. I'm missing a damn time period. I put the wrong one in there. No, that's right. Right, so we know that if we stick to this scenario, which this is saying that we don't engulf London and we're above London for 9:30 to 10:30, if that was the case, then this would be the lowest point that I would be able to put the 7 to 11:30.
Yeah.
Right? And then this would be like this.
Yeah.
Right? Looking at our statistics, right, that's definitely a possibility. Right? We haven't even come back into the London range. So this is definitely a possibility. And that we can see that we slowly grind up until 8:30. 8:30, which does not reflect the retail sell news, but it does reflect a dip at 9:30 and an instant recovery by 10 o'clock and then a flat range, right? So now let's go put in, right, scenario 2 with London. We're going to go broken model London because that's saying at 8:30 news drops, right? Because we're trying to see what scenario 2 news drops, making London's models broken, which is fine.
Yeah.
And then we're going to say that New York engulfed, right? What does the day look like? Not saying it will happen, and we're definitely not saying it's the highest probability. But what we are saying is worthy to put on our charts because it is a scenario that we have to take into consideration.
Yeah.
Especially since we have hit almost 100% of our average daily range already, right? So if we hit the top part of this, right, we're still engulfing London. And now we just put the puzzle pieces together. Is the 8:30 volatility going to be responsible for the retracement and the engulfment of London? Well, if that's the case, right, it puts us in scenario 2, right? So something like that.
Yeah. I'm seeing the same or similar. Is it worth taking a look? The fact that Asia was contraction.
You could look at that.
Oh wow. Okay.
So this is how the daily profile would look.
Yeah.
If we do get that engulf, that retracement to midnight settlement, et cetera, et cetera. So we make the high at the high of the day at 9:30 to 10, and then we suck back into the range and we go flat all day. So in scenario one, where we can't breach, it would look like this.
Yeah.
Right? And this would have to move up to right here.
Yeah.
And something like this, right?
Yeah.
This would be scenario 1. Right? And remember the scenario is this right here. Right? Scenario 2, this is London. Right? Would look like this. Does this make sense? To the viewers out there, is this making sense in how we're doing this?
Chat is quiet.
They're all taking a nap. They went back to sleep.
Get your coffee on.
Yeah.
Oh.
And this database will be available for the annual subscribers once we complete it for $80 a year. That's to pay for my time engaging with you guys and studying this and back testing every single one of these concepts. That's paying for Costa's time, bare knuckle fist fighting, so yeah. And then the database itself will be based off of these 4 ranges right here. These 4 times 18 to 230, 230 to 7. Damn, it's 6:30. I gotta jump. 7 to 11:30, 11:30 to 1600. All right, any questions? Speak now, or it is what it is. I'm gonna jump.